SOFI stock hit a very key level today and showed a lot of strength overall. We'll see what happens, but it looks like SOFI stock might take a move up to about $10 here in the very short term future. And I want to go over exactly what these key levels are, why this is so significant, what I expect to happen. But overall, I want you guys to keep in mind, this is not a short term trade. So if you're in SOFI and you're just dabbling here and there, trying to trade into it, thinking it's going to make you a bunch of money overnight, maybe it does, maybe it doesn't. But this is truly a stock, I think, in the next 5 years that is a 10x company, and that's my firm belief, and that's why I like to cover SOFI so much here on this channel. So just keep in mind, none of this should be construed to say that, hey, you should go YOLO your portfolio into short-term call options. For an example, not what I'm saying. Now, besides that, we do need to go over what happened in the markets today, what was bullish, what was bearish, what did the Fed say, and what we can expect heading into the future, and much more. So hit that like button and subscribe to the channel. I also did start a Patreon. If anyone wants to support, show a little extra love out there, that's perfectly fine. Obviously, you don't have to do that. That will be linked down below in the pinned comment. I will be starting a Discord, sending out my trades. Anyone that signs up for any plan can get in on that. Those will be in real time. What I'm doing, what I'm buying, crypto options, long-term investing, all of that. It will be sent out there. So if you guys want access to that or just support the channel, that is how you can do that. Let's get straight into this video. SOFI stock was up 7.19% today. This is the seventh, let me say that again, seventh, I gotta say it 3 times to really make it stick, day that we have been positive. That's absolutely incredible. Earnings were good. Insiders are buying the stock. Option activity is starting to cool down on the bearish side. You are still seeing a lot of bearish activity, but not nearly as much as we were saying. People thought fintech, people are pricing these stocks, Square, PayPal, SoFi, as these guys are going bankrupt. And then earnings come out, everybody's shocked, and boom, people, start to slowly cover on some of their short positions, not nearly enough to really move the needle. But start covering a little bit and start reducing some of their overall put exposure. At the same time, when you look at Fintel, the 13F filings are exploding for SOFI stock. There is a lot of institutional investors that are starting brand new SOFI positions and adding to their existing SOFI positions. You can see a lot of green and white in here. You can see a lot of firms adding to these positions, like Jane Street Group now has almost 6 million shares worth of a call position. Increased that position by 75% in the last quarter. All of the green are brand new positions, massive positions. A lot of these are millions of shares per position. So you're not really seeing a lot of red, and the red that you do see are a lot of puts that are being sold out of, as well as very small positions in SoFi that have been closed out. A lot of those firms are not the big players. A lot of them you've never heard about before, and they're probably the ones that are in a little bit more of your risky assets that might have got margin called. So overall, I think it's been very, very good what has been happening with institutional investors and the 13F filings that have been coming out. At the same time, a lot more people, insiders, continue to buy the dip on SoFi stock. You are seeing Harvey Schwartz, he bought 15,000 shares for about $94,000, and Anthony Noto bought about $250,000 worth of shares, about 39,000 shares, give or take on that one. So you've seen a lot of insider buying as of recently. I've talked about this many times. The only reason why insiders buy shares, the only reason, is because they think the stock is going to go higher. You can't pump a stock right now in this market environment, even if you wanted to, even if that was your intention to pump a stock by buying shares as an insider. That doesn't work right now. So you can't even say they're trying to pump the stock up. This is because they see the numbers coming in and they are looking very, very good. Actually, 20 transactions here in the last 12 months of buys. Even in the last 6 months, you have seen a pretty even amount of sells and buys, which is a very good thing. And over the last 3 months, you have seen $2.23 million worth of buys and $40,000 worth of sells. There's a lot of reasons why people sell stock, but there is one reason why people buy stock, and that is because they think it's going to go higher. Ortex Insider momentum is looking very good as well. It's at 60, so it is pretty far in the green over here, showing there is a for the market cap of SoFi, for the price, for the average institutional buys across the stock market, SoFi is definitely in the upper tier of insider activity. So that is looking very good. And that I personally like to see this a lot. Like, this is the clearest indication that you can get that the business is on track, especially after, some of the directors leaving and some of the bad FUD you've seen out there. This is very, very bullish, and it should hopefully change your perspective a little bit on what is actually going on behind the scenes with SoFi and what the numbers look like for the next following quarter. So I think that is very good. At the same time, what happened in the markets today? Well, the Nasdaq was down about 0.25%. The Dow Jones Industrial Average was down 0.75%. The VIX was actually down 5% as well. So considering all indexes were red, S&P down 0.5%, a little bit more. The Dow almost down 1%. Russell hardly eking out a green day, like super small, not even 0.1% green. To see the VIX down 5%, not even slightly green, is very, very strange. And I really don't know why the VIX is down that much on a day where the markets did not necessarily perform well. But what I will tell you is a lot of money is flowing out of your so-called safety stocks or your consumer staple stocks and going into a lot of these stocks that have been beaten into the ground, like SoFi, that are more long duration growth. And I think a lot of this is being fueled by the fact that China, we're getting more good news today out of China that they are considering lifting more lockdowns. They have lifted a lot of the lockdowns on most of the city in Shanghai because they have not seen COVID cases there in the last 4 or 5 days, or I should say brand new COVID cases. So that is going to help inflation, and that is going to potentially slow down the Fed's rate hike cycle if inflation, or I should say when inflation does start to come down over a couple month period. That's going to be very well. People are starting to price that in a little bit more. That's why you're seeing SoFi seeing its 7th straight positive day. That's wild to say because SoFi pretty much has been going straight down, and I'm even still down like 45% on my position. So there's that. I think it's a great time to still be buying SoFi stock, but I do think we will ultimately make lower lows in the markets once we do get more news, because we're in a very weird environment right now. If there was ever a time to bounce, it would be right now when you're considering what has happened over the last couple of months and the data that we have gotten. Like, in all reality, we just got our Fed meeting. We just got the inflation report. There's a war going on in Europe, potentially World War III. You got China COVID lockdowns, horrible retail data, not good earnings across the board, especially earnings that reflect the actual American consumer. Like, everything has been bad. There has been no good news that has came out recently. So when it's that bad, you do tend to see bounces, but you're not really seeing that right now. So any bit of good or bad news related to, inflation, the Fed, the consumer, the war, China, so many things is, going to be a lot bigger than not, right? Bad news was going to be really bad. Good news potentially could be really good. So you have that. We didn't get anything specifically for the day. And for tomorrow, you don't really have anything important as far as data. You virtually have nothing that comes out. You do have the Baker Hughes oil rig count for May 20th. And that comes out at about noon, so that could move oil around a little bit. You do also have Great Britain retail sales month over month for April. That could be important to our markets. Keep in mind the day that China's retail sales came out, and they were massively off expectations. They were terrible, down over 11% year over year and down 6% more than what the expectation was. That dropped the markets like 4%, right, the same day. So Great Britain's retail sales could be important because they tend to foreshadow what's going to happen in America. Same thing with China. So if that data also comes in as a big downside miss, that could be not such a great thing. But that's pretty much it. We did have a Fed speaker, Fed Kashkari, that came out right after the bell did ring today, and he says we are removing accommodation even faster than we added it at the start of the COVID pandemic. So I think that could be seen as a bullish thing, because they're basically saying financial conditions are withering away and interest rates are increasing at a very aggressive pace, and that should help inflation and definitely help inflation expectations, which is arguably more important than the actual inflation reading itself. Now, the federal funds rate monitor tool has us firmly pricing in 50 basis points at least the next 2 to 4 meetings. The fourth meeting down is really the oddball there, but we are pricing in 3 back-to-back 50 basis point rate hikes at the June 15th meeting, July 27th meeting, and the September 21st meeting. So I don't think we can necessarily even see a new all-time high in the markets, at least until September. Until the Fed could potentially pivot would be November, December timeframe. Now, we do have 4 weeks, 1 day, 15 hours, and 40 minutes until the June 15th meeting, and we do have the next CPI reading as well. So if CPI is bad, then you could potentially get a higher point increase than 50 basis points. You could get a 75 basis points or a 1%, and that's not going to be good. The Fed, we know, wants to get the federal funds rate up to that neutral stance, which is around 2.5% to 3%, and they want to go further than that. They want to restrict financial conditions. And once you do see China lockdowns end, once you do see inflation coming down for multiple months and the Fed U-turning, that's when you see new all-time highs in the markets. Until that happens by the end of this year, if not potentially a year or two from now, you want to take this opportunity to buy as many shares, me personally, as in SoFi as I can, now sitting at almost 1,000 shares, and also in companies that could do very well over the next 3 to 5 years. Take this opportunity to build out those positions. You don't really get a lot of opportunities where the NASDAQ is down 28% and it doesn't just instantly recover again, right? So you have a lot of paychecks, for lack of a better word, that are going to come in here, and that you can really start to put a lot of money to work. So in the next couple of years, you're going to be sitting very, very good. So that is that. That's going to really be the next catalyst, June 15th, as well as I believe it's June 11th, the next CPI report comes out. But until then, I don't really expect anything too crazy. Fed speakers, those will be very important. Any data, but we have gotten earnings out the way. We've gotten the Fed out the way. We've got our last CPI report out the way. And then the GDP report, I believe, does not come out until early June as well. So for the next couple of weeks, it might be a little bit dry as far as economic data and kind of what could move the market. So I think China will be very important, and I think that's why you're seeing this big rotation into a lot of stocks like SoFi here today. If you look at your portfolio, you're in a lot of longer term growth, then it's doing pretty well today. Now, as far as the short interest of free float, that is sitting at 20.25%. Current shares that are sold short, 147.39 million. Cost to borrow max at about 12%. The utilization is at 100%, and days to cover sitting at 4.11. So the prospects of a short squeeze do look very prominent. And I will say, for the day, you had return shares of 13.29 million, borrowed shares or shares that were sold short of 2.35 million. So you did see almost 11 million shares get covered today, and that's about 1/15 of what is actually outstanding. We had a 7% positive day today. So if that provides you any kind of context here, SoFi stock could easily double from here, go back to $15 per share, and we would still have an over 10% short interest as far as just a rough calculation there. So there's potentially a lot of room to head up in the near term future, but anything can happen when it comes down to it. We did get earnings today in 2 key industries. We got AMAT earnings, which were very bad across the board. They actually guided down. The stock was down like 7 or 8% at one point. Now it's only down about 1.5%. So that's going to be very important. And AMAT is a semiconductor manufacturer, so that could hurt the semis coming tomorrow. That could hurt the overall markets. When semis do bad, the overall market tends to do bad. On top of that, you have Ross Stores. I'm sure you've been in one before, ticker symbol ROST. That is obviously apparel retailer that is down about 22, almost 23% here in after hours. I do have some puts on AMAT and Ross that are for June. And the Raw should definitely hit pretty well tomorrow. But nonetheless, this could weigh on that consumer demand fear that the markets tend to have as of right now. So I would definitely watch all of that. As far as SoFi stock in particular and the technicals, why today was such a big level is because we closed right on $7.75 per share. That is the 50-day moving average. That is our long lasting level of resistance, and I definitely did that too much, but you could see right here, you really have to zoom it in because we're right on the penny here. 775 is the 50-day, and we closed above it, and this half percent move in after hours, 4 cents, you're gonna open up hopefully still above 775, and that would be us breaking out above our long-term resistance level, which you could see we've peaked out at this level once, twice, you could call it 3 times right here, and we're finally breaking out above that, and that could set a new tone and set a new trajectory here that potentially could head back to about $10 in the near-term future, like maybe, you know, tomorrow or next week. Definitely a very good indicator, and that was the level I've been talking about for a while now. We finally broke out above it, so there's a lot to be excited about right now, but I would definitely keep some cash on the sideline because I don't think we're going to hold up at these levels for too long. Once the next bad data point does come out, there's going to be something that markets freak out about that you know, throws everybody off. But nonetheless, great opportunity to be buying the dip. The MACD is bullish, but not that bullish. Like we could definitely rally a lot more. The RSI, after its 7th straight positive day in a row, is sitting at about 58, so it's kind of neutral, getting back up to those overbought kind of levels. We are higher than what we have been since the stock was $25 per share and the RSI was hanging out at the top. We're higher on the RSI than we have been throughout all of 2022 so far, so you're seeing a lot of bullish momentum as of right now, and I do think we will see at least one more strong break and potentially get back up to about $10 per share. So that is going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Get those free stocks like I just said, and if you guys want to come support the channel, get access to my trades in real time, link down below in the pinned comment for that. Until then, you guys enjoy these summer sunny days. It feels nice outside. I actually mowed the yard because why not? Save the long crew, save my, you know, $50 this week because, you know, portfolio could definitely use it a little bit more. So that's gonna be it. Thank you guys. I will see you in the next one.